Hey everybody, this is Jim at SP500chart.com. It's a little bit before 2 o'clock in the afternoon here on Sunday, August 25th, 2013. We're going to take a look at what took place in the markets, specifically the S&P last week, and we're going to see what we can take into this upcoming week. And of course, we'll take a look at what transpired on Friday as well. Before we get into it, I will need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. I want to say up front, thank you for sticking with me, so many of you, for so long. This website really started out just being a little experiment, and I just want to say thanks. I hope you continue to get something out of it. I know that the returns we've been seeing lately out of the chart are nothing like what they were 2 years ago, a year and a half, or a year ago. But, guys, human nature hasn't changed one whit. So we'll start to see some things happen eventually that have a larger payoff in terms of an expected target. Well, let's take a look. Starting out here on a 30-minute chart, we came into Friday specifically with the idea that Thursday's little move above this resistance line right here would likely create some follow-through buying. And it did. Not a great amount, but you can see Friday was an up day, which after having had a number of down days in the previous week and a half, that was certainly a nice thing to see. And with this move over this line, even though it's only by its greatest margin has been a 10-point move over this line, and that's less than that's roughly about a 0.6% margin. I'm still going to say that is significant because we spent the entirety of Friday over that line, got a quick little early back test of sorts within the first hour, but then a pretty good rebound, and then a little bit more buying pressure came in as the day progressed. Now, what's our target? Well, I think we can use everything that happened south of this line to help us establish a reasonable upside target. And that target is about 1674. And what's interesting, and again, this line may not be, I tell you what, let's just get rid of that. I may live to regret getting rid of that, but the fact is nothing lines up that nicely and neatly over that particular line. And it's hard for me to tell whether this was an out-of-bounds area or just let's just forget that. Let's look at what we got. First off, we had our head and shoulders top that had a minimum target of about 1656. That got met fully, actually in the previous week, but we spent most of this past week still under selling pressure. Then we saw this little neckline develop throughout the week. We also had identified this descending channel, and I think we had that pretty much going by the end of the day on Monday, with the idea that once we get over that channel, that should be our first sign that the S&P is ready to reverse and head back up. Now, the only thing that happened was on the 21st, and I believe that was a Fed day. We had some volatility in the afternoon that took the S&P down back into that channel, but just momentarily. Then we got back over it. Adding to this little neckline right here, we also had our line at about 1653 that we knew the market would likely maybe struggle with a little bit, because this should have been a potential for support. And instead, we broke that a couple times, so it just looked like that now may give us some resistance. It didn't really, but this top line right here, this little resistance line did. So now we're over the top of this, and though not by that 1% margin we like to see, I'm going to say by a margin that is enough for us to now look to this line and this line also. If we return back down into the 1650s, I would look to either one of these lines to provide a bounce. Now, what about that's where we may have support? What about resistance? Well, I think resistance here is pretty easy. Resistance is going to be either this neckline up here, or it could even be a little bit lower than that at gap resistance at about 1685. Or we could, and this is a different line, or we could be looking at resistance. Actually, that's the same line. We could be hitting some resistance up in the or just north of 1680. But I think if the S&P is able to get on up to that area, it seems like it should at least come up for this gap to test gap resistance. Now, the reason this line is kind of funky is it just doesn't really line up perfectly with a number of things. I thought this might be a decent resistance line. I thought, this might be a decent resistance line. And I'm going to make this really a pale gray. But if the S&P has the strength to break this resistance, I think it's going to have the strength to get through this too. But again, our minimum target is around 1674. If we look at the way things traded on a little bit smaller scale, again, you see 1, 2, 3, 4 attempts to break this resistance line. Then once it finally did break, we got a back test, a bounce, and then starting to head back up. So for right now, things look like we very well may start the week in a positive manner. If there is some negative, it's likely not to be that great, because I think we'll get picked up on support down here at this, let's call it a neckline. And what this really would end up being would be a double-headed inverted head and shoulders. This would be the left shoulder, a head, another head, and then a right shoulder with a little Fed day volatility thrown in. So coming into this week, I'm looking for, because we have support much closer underneath us than we have resistance above, I'm thinking the predisposition for the week starting August 26th should be, we should see some market gains again. So let's see if that holds true. Guys, I think that says it. My voice is about ready to give out, so I'll take that as a sign. Again, support, down here, strong support, Resistance, maybe. Resistance, likely. So that's where we go into the week starting August 26th. Appreciate you taking time out of your day to watch this. This is our weekly review. And really, I think the week was pretty good. The problem is we're just dealing on very, very small moves. As we're up kind of at these levels, we're not seeing those big swings like we were seeing in a year ago or so, where the market would be down 2% one day, and then over the course of the next 2 or 3 days it'd be up 3%. We're just not seeing that kind of action. But rest assured, once we make a top, we'll start to see more selling strength and volatility. Then whenever we make another, and I'm talking about a significant top, when we make another significant top, there'll be volatility. When we make after that another significant bottom, I'm talking years, I'm not talking next week or next month, then there'll be more opportunities for us to take advantage of that kind of rapid movement that we see in the early stages of either bull or bear markets. Right now this is looking bullish, but it's looking like it's just not going to run in these big chunks like it used to. So, hey folks, thanks for watching. I appreciate your time and your support.